Good afternoon, everyone. Thanks for joining us. We have an update with Jason Kosek, CEO of Millennial Precious Metals. Millennial trades on the Venture Exchange under the ticker MPM. This session will focus on the last two news release items, which we're discussing new targets as well as latest intercepts. For anyone that's newer to Millennial Precious Metals, I would recommend maybe checking out some of the previous webinars that you can find on the Adelaide Capital YouTube channel. And there will be a big Q&A section to the session, so feel free to input your questions in the bottom of your screen. And as always, this will contain forward-looking statements. If you'd like to know more about those, you can find the disclosure on the company's website in their presentation. With that out of the way, I'd like to introduce Jason Kosek, CEO. Hi, Jason.
Hey, Deb. How's it going?
Good. How are you?
Oh, good.
So some great results out this morning. Maybe you want to start with those and then talk a little bit about the November 16th release as well.
Yeah, that's exactly what I'm going to do. So first of all, thanks everyone for joining. This is more of just an update on the last two releases, as Deb mentioned, and then I'll open the floor for any Q&A that people may have from throughout the year or what's coming next. Today's release was the last batch of holes that we released from Wildcat. Very successful program. What it was really designed to do was to do the geotech, grab enough material for the metallurgical data, see what the resource conversion rate was from inferred to indicated, and really get a better geological understanding of what's really controlling this mineralization. The beauty is that every time we try and step out, it's a great problem to have. Every time you try and step out to drill holes into the pit wall, we keep on intersecting mineralization, which is spectacular. Example for today is a 150 meter step out right from surface, 30 meters of 0.3, and then another intercept of almost 55 meters of 0.4. As everyone knows, the resource grade is 0.4. Why does 0.4 work in Nevada? We can touch on that just to re-highlight that for everyone. Is that I tell people grade is not king, margin is king. And there's a lot of factors that go into the margin, but when you have material right at surface with no strip, it does allow you to mine that material. Okay. So all in all, it was a very successful program from a metallurgical perspective, from a geotechnical perspective, from extending the mineralization, both to the east. And also, as you can see here, is that the red outline is the old oxide pit shell, and now the pink material is all the additional oxide material. Okay, we do know that this mineralized horizon does go underneath the post-mineral basalts, and that's something that I'll talk about from the previous release. Okay, this is what gets people like myself, an exploration guy, very excited. Okay, and what we've done here is over doubled the mineralized footprint. The existing footprint was 1.5 kilometers by 1.5 kilometers. We're in at almost 3 kilometers by 2 kilometers. Okay, so as you can see, these green areas, green and black areas. So these are the existing resources that we have. All these samples that have been taken over the year was from a detailed mapping and sampling program that was very, very productive. All these samples that you see out here, all these samples out here are not in the current resource. Red is above a gram, green is above 0.25. Remember, our cutoff is 0.15, okay? So we're very excited about the resource growth potential just outside the pit areas. It's low-hanging fruit. People may ask, why don't you just go drill that right now? Just as a reminder, there's two types of permits in Nevada, okay? There's your notice of operations, so that gives you 5 acres of disturbance, okay? And then there's a plan of operations, which gives you not unlimited, but as much as you do the work on it. And in order to get the plan of operations, you need to do your baseline flora, fauna, your cultural and whatnot. So it takes a lot of time to build that, and it's quite expensive. All the data will be submitted to the government by the end of the month, and we should have that permit in the next 6 to 8 months to drill this low-hanging fruit. One of the other things that we notice, and I apologize, as a geologist, I try and not go into the weeds too much, but what's producing all of this material right here is basically these are phreatomagmatic breccias. And what is a phreatomagmatic breccia? It's a breccia that's very close to the source of where it's coming up from. And this is where it's coming up from, okay? So volcanic material is erupting, getting put onto this green unit, which is a diorite. And then because this unit has good porosity and permeability, and there's high-grade veins that exist below it, then the fluid migrates up these cracks and veins, and then deposits the mineralization in this porous rock. But the main mineralization is actually coming on the margins of these diatreme vents, and it's never been drilled before. The only place that you can hide something like that on the property, because a phreatomagmatic breccia means close to the source, the only place you can hide it is really right underneath these post-mineral basalts. So that's what gets us very exciting, that the main plumbing system is yet to be identified, okay? The other thing too is that, as you see, all this orange material, which is this phreatomagmatic breccia, exists below this basalt, okay? We have one hole out here, a 200-meter step out was 30 meters of basalt, and then your 50 meters of a gram. So, there's significant growth potential just surrounding the pit, but also then finding the main feeder. And as a geo, that's what gets me very excited. We will start drilling that right away, coming in as soon as we have the plan of operations. So it's very exciting for us. It was a very exciting and successful program. I just want to touch on one thing. We went to go look at, how rare these projects are and why they're so rare. Sorry, I should start here. Is that this is what I was talking about, is in order to understand really the economics, you need to do the grade divided by the strip ratio. So what is the strip ratio? How much waste you have to remove to get to your ore. So the more waste you have to handle, the more reclamation, the more blasting, the more trucks, and the more fuel. So your OPEX goes up significantly, and your CAPEX. So when you do that, Millennial is the highest effective open pit oxide project in the best mining jurisdiction in the world. Remember, Orla bought the railroad project, grades at 0.77. When you factor in the strip, the grade is actually 0.19. They had 1.3 million ounces of oxide. In our next resource update in early 2023, we will be above 1.3 oxide. And
I have a question, Jason, just a clarifying question. So that red color, the potential feeder mineralization on slide 11, would that also be oxide, or is that sulfide?
Most likely that'll be sulfide.
Okay.
But, that's going to be, now you're looking at material. So this is very similar to a deposit called Sleeper. So what happens is you have passive alteration in your main host rock on surface. And usually the grades, 0.4 to 0.6. Sleeper was 0.2, 0.3. And then once you get into the actual feeder, they had 3 million ounces at 10 grams. But it is then sulfide material. So the beauty about these systems is that the open pit oxide project generates enough cash flow and gives you this flexibility that you can put a low capex, high margin project into production, and later in your mine life, you go for high grade ounces, but the cost of the mill and everything in your development has already been paid off by your open pit heap leach. So it's very analogous to as well as what George Salamis has at Integra. They have a really nice high grade feeder zone and a really nice oxide cap, and it gives them a lot of flexibility from a development perspective. If you just had to deal with the high grade, that's big capex right up front. So the beauty is in a market like this, we have a project that has great flexibility, lower capex, high margin start that can offset the capital for a bigger, higher grade, milling facility.
Okay. I actually have one other question just on the new targets, since we're on that slide, and maybe we can revisit the results from today. So just to clarify the size of mineralized footprint, your PR notes that the footprint has increased to 3 kilometers by 2 kilometers from 1.5 by 1.5 previously.
Yeah.
These dimensions, is this the current resource pit plus 3 new targets around the resource, the Breccia Pipe, North, and Rhyolite Ridge? And
so the 1.5 was the current resource. Now we're talking 3 by 2 with Rhyolite Ridge, the North Target, and Crossroads.
Okay, thanks. I just wanted to clarify. Yeah. Continue on, Jay.
All good. And just how rare these things are. Right now, the average acquisition cost for permitted ounces is 0.87 NAV. Okay, we trade at 0.1. By the end of next year, we will be submitting our mine plan of operations. So there is a significant re-rating potential for these types of ounces. Okay, and as I mentioned, these are some of the highest quality, highest margin ounces out there. On an EV to resource perspective, we're at 16. For permitted, it's 81. For unpermitted, it's 67. So again, there's a significant re-rating opportunity just on the existing resource. We're not talking any of the exploration drilling that we're going to be doing next year. Okay. So, very, very exciting to be growing, de-risking. And as you know, when you go through this list, Hasbrook is 50% owned by Sun Valley. So that's gone. Northern Bullfrog is gone. Pan is gone. Florida Canyon is Argonaut. Round Mountain is Kinross. Mother Lode is gone. Railroad is gone. So, of the top projects, a lot of them are gone and not available. And these are the types of margins that big companies have been paying. Now that we have the cash in the bank, we've removed Waterton off our share roster. We will have the exploration permit. We will have the PEA. We will have the resource. It's going to be a very exciting 2023. With that, I'll open up the floor for more questions. That's really all I have for everyone today.
Sure. And again, if anyone in the audience wants to ask questions, feel free. I'm just going back to a point that you just made about Waterton. I'm assuming that's related to your November 14th press release, block trade of 13.5 million shares. Can you provide any other detail on that trade, on the parties involved, et cetera?
Yeah. So, as most people know in this business, is Waterton is a private equity fund. Okay. And typical private equity models is 3 years to invest, 3 years to harvest, 3 years to flip. We wanted to get ahead of them by them selling shares into the market, okay? Because that's what they will do. That is the reality. That's how they monetize their value. They're closing the fund, okay? So what we wanted to do is get ahead of it. As soon as that last block was released, we wanted to put it into key people's hands. So it was 40% institutions, 40% high net worth, and 20% retail brokers. So unlike most companies, we got a very, very tight float and a strong cash position. So we're all kind of banging our heads against the wall with the gold tape here, but I really think it's starting to turn with a inversion of the yield curve, a weaker US dollar, and stories that have a tight flow, cash in the bank, and some major catalysts coming down the pipe are the first ones to really go. Because I'll tell you, there's this, one of the BMO bankers was telling me 62% of the junior companies on the venture exchange are under $2 million, okay? So when the gold tape goes, all those people are going to tap the market. So there's going to be a financing overhang. So we're in a very lucky position to have great shareholders. We've removed Waterton and in a strong cash position.
I had a follow-up or clarifying question from the audience. Can you clarify the statement you just made? At the end of next quarter, we'll be submitting our mine plan of operations. Is this the mine plan of ops or exploration plan of ops? And can you elaborate on the sequence of permitting?
So by the end of this month, we'll have the exploration plan of operations submitted. And usually that takes 4 to 6 months in Nevada. By the end of 2023, we'll have all the engineering done to submit the mine plan of operations to the BLM and to NEPA. And as soon as those ounces are submitted, that's where you get that re-rating. That's where companies will pay 0.8 on a PNAV consensus or $90 on an EV ounce basis.
Okay. And another audience question. How much cash do you have currently? And do you already have an idea of how much drilling you'll do next year? And can you also specify on which properties you plan to drill?
Yeah. So right now that is the cash position as of the end of Q3. Okay. We will finish the year around $7.5 million. Next year, the team right now is literally as planned all the holes that we will be drilling. There will be some drilling at Wildcat, possibly some at Red Canyon, but until the board approves the budget, I'm not going to give exact meters onto what project is getting what meterage. I can say though that once the exploration plan of operations is approved, there will be a much bigger drill program done at Wildcat to attack all the low-hanging fruit.
Okay. And a couple of follow-up questions on permitting. Sorry to jump around on you. What permitting issues could result in not receiving the exploration permit?
So what issues? So an exploration plan of operations is very standard. There's all the baseline flora fauna has already been done. We've already talked to the BLM office. There's no questions of getting an exploration permit. This is Nevada. This is the #1 mining jurisdiction in the world. Obviously, from now, a mine plan, from an actual mining permit, there's a lot more work that needs to be go into that. And those can take, a year to sometimes 3 years. We're very lucky from a mining scenario at Wildcat, especially, is that the mine plan of operations will not trigger an EIS. We can get it under an EA. And why we can get it under an EA and it'll only take about 12 months to permit is because there's no waste rock facility and there's no pit lake.
And how much disturbance area is left on the NOI? And will that be sufficient to run a drill program before you receive the plan of operation?
So the beauty is that some of the areas we can drill. So in Nevada, if you're 1 mile away from your existing NOI, you can apply for another NOI. So areas like Snow Squall, those can be drilled. We also have another area. It's for the leach pads that we can drill. Right now, under the current NOI, within the pit area, we've disturbed 4.5 acres. But in that 4.5 acres, there was a lot of pads that we built this year that we didn't use. So yes, we can drill Wildcat. without the exploration plan of operations to show resource growth, if that's kind of what the question was getting at.
I think that's what the question was asking. I have specific questions about some of your assets. So what are your plans with Red Canyon?
So, great question. It's a lot, things like Red Canyon, these things can be world-class systems, okay? One of our big shareholders, Crescat, Quentin Henning, a very famous geologist, absolutely loves this project, okay? When you can get the top 1% of drill holes drilled globally, and the rest in the top 10%, this is a significant project, okay? And the beauty is, it's never had a plan of operations on it. We have a lot of room for disturbance. So these Carlin systems, they basically form in cigar-shaped tubes. So following the plunge of these cigars, basically to the northwest and the southeast, along these big regional structural faults like the wall fault, is something that we would do. Right now, we're debating on drilling it ourselves or JVing the project out and using someone else's money to do it. I hate JVing projects out, but in this type of market, we got to be very conservative with our cash balance. And it's a just different risk reward profile. Cortez and stuff like Pipeline and Gold Rush, those are 10, 20 million ounce deposits. And every, metric that those deposits have, Red Canyon has. And one of the big thing is intrusive rocks that are, 38 million years old. And the window for Carlin is between 30 and 40. So a long-winded answer is that, yes, we are looking at drilling it to drill out these step-out holes to follow these cigar-shaped mineralized bodies down the plunge. Because when you're, this intercept, for example, had 9 grams over 22 meters. Like these are world-class systems. The difference between Red Canyon and Wildcat or Mountain View is the risk-reward profile is much different, okay? Red Canyon can be world-class, but it's risky. Wildcat is going to be a couple million ounces, but we know it's there. So there's a different risk-reward profile that we have to be very dynamic when we're allocating capital, and depending on where we are in the commodity cycle, we allocate it differently. And right now, until we start seeing this kind of tailwind in the gold space pick up, stuff like this would be more likely to JV. But again, I would love to do it myself. It's just conserving. It's just conserving capital is the thing. But a junior company would be very lucky just to have Red Canyon.
Got it. And then I had a question about Mountain View. So what is the plan for Mountain View? Will there be a drill program in 2023? And Jason, I think it might be a good time to clarify that your permitting process covers both assets, I believe.
Yeah, so it'll be an exploration plan of operations for Mountain View and Wildcat. Okay, and then and then Wildcat, by the end of 23, early 24, we will submit the mine plan, but only for Wildcat. And the reason why we'll only do the mine plan for Wildcat is because it's much quicker to permit because there's no pit lake and there's no waste rock. Mountain View will take longer to permit. And in the mine sequencing, Mountain View comes on in year 3 or 4. So that basically all the cash flow goes to pay for Mountain View. Mountain View, we've only disturbed 4.2 acres of disturbance. There was a really nice intercept that we drilled right at the end of the year. It was basically 40 meters of almost 4 grams. So we will follow up on that hole for sure.
And what's the timeline for an economic study for Wildcat and Mountain View?
So we were trying to get it out by the end of the year, but the drillers took a lot longer drilling than we expected. And then that backlogged the lab, and then that backlogged the Met results. So we're hoping early Q1, end of Q2. Early Q2, end of Q1.
And the plan is to release these two resource updates at the same time?
Correct.
PEAs, okay. And then going back to the results that you put out today. So 2 of the intercepts reported this morning step out oxide mineralization by about 70 meters below and 150 meters to the northeast of the 2020 resource pit shell. Do you know if these latest intercepts will be accounted for in the upcoming Wildcat resource update?
Yes, they will be accounted for in the updated resource.
Okay. And then the deeper than expected oxidation profile is highlighted as an expected positive for the upcoming Wildcat resource update. Can you explain how this could be reflected in the updated resource if it is higher ounces, a lower strip ratio, or both?
So you're just adding more tons, okay? So what I've just highlighted there is the old pit shell, and this is the new oxidation profile that the team has interpreted. Okay. So again, this pink material and above is the new one. Sorry, that's my pen. And the old one is this line. So basically this will come inside, and this material down here and this material down there will come in. So you're adding tons, in turn adding ounces. And because every time we go to step out to drill the geotech hole for the pit wall, we're ending in mineralization. You're not going to be, as you push the pit wall out, you're not going to add to your strip.
Okay. A question about the overall grades reported from the phase 1 drill program. Looking at the summary table of phase 1 drill intercepts, it looks like there's several intervals that are multiples of the 0.4 grams per ton Wildcat resource grade. And all of the reported intercepts from the 12-hole program are above the 0.15 gram per ton cutoff used in the 2020 resource. Can you speak to the expected impacts on the resource grade, ounces, and strip ratio?
I could say that the resource grade will most likely come up. The ounces most likely will come up. But the major inputs that you need to really solidify that is, we know the mining costs, we know the geotech. The last thing that we're waiting on is the metallurgy. And the first column we got back looks really good. The bottle rolls look good. So depending on how we optimize our pit shells and depending on what gold price we use, it could vary a little bit. But I can tell you that the ounces will increase and depending on what gold price we use, the grade can increase as well.
Okay. Back to some audience questions for you. How thick is the basalt cover above the postulated feeder structure at Wildcat? 30 meters was mentioned.
Yeah, so there is 2 historical holes, one at 20 meters, one at 30 meters.
With a better understanding of the geologic model for Wildcat, is it possible to incorporate more RC drilling to lower cost per meter?
Yeah, so from now on, all you will do, now that we have a very robust understanding of what's controlling the mineralization, 90% of all the drilling going forward will be RC. The exploration drilling will be RC, but there will be some more core drilling for more met work for the mine plan. So the only reason we did core drilling, so everyone knows, is to get a better understanding of the controls of mineralization, to do all of the geotech, because we needed HQ-PQ core for the geotech, and we also needed HQ-PQ core for the met studies. So your your drilling costs will drop substantially next year.
Okay. Here, I'll read this out because it's a compliment. You deserve one once in a while, Jason. Thanks for the presentation. I appreciate the efforts in advancing the project. We expected the share price to improve after the November 16th news release, but the opposite happened. Even today, there is good news from the company, and gold is up, but the share price is flat or slightly down. Why do you think the share price is not reacting to the good news?
To be honest, I wish I had a proper answer for you. Unfortunately, we really don't control the share price. What we set out to do, we accomplished this year. We accomplished more than we said we were going to do, and delivered on all the deliverables. We've shown how we're going to add ounces. We're showing how we're de-risking ounces. We've removed a major overhang on our stock, which was Waterton. Now that that's gone, I think there's just a general pressure in these micro cap stories that hurt companies like us. Now, also, you are going into tax loss selling season. So there will be pressure on stories like this. But I think it's very important, to realize that these are very rare ounces in the best mining jurisdiction in the world, okay? You could count on one hand the amount of projects that are like this left, okay? And I think, I know when these markets move, they move quick, okay? I've seen this done in 2015, in 2008, 2009. So, these things happen, and this is, where people make their fortunes in mining is buying names that have great management teams, that have high quality ounces in safe jurisdictions, and have cash in the bank, and have a big institutional ownership. And you support names like this now, and you'll be rewarded when the gold sentiment changes. And it changes very quickly, and I think you're starting to see it change. But a long-winded answer, I think the whole space has been beaten up, and then when you get beaten up, then there's more tax loss selling. Then there's more tax loss selling. So all those things combined, you can put out the best drill results, and it's just going to keep you flat. But when it changes fast, and these are the stories that move the quickest.
Are you aware of any specific seller or selling, or have any insights into that side of market dynamics?
So we try to track where stock's going from the CDS reports and what shop has what. It's very difficult, okay? If I wanted to focus on who is selling stock, I wouldn't have any hair left, and I probably wouldn't have my job. All we focus on is reaching out to our existing shareholder base, reiterating the story. They are all very supportive, and going out and finding new buyers. Again, I'm sure some people, when we did that block trade, if guys wanted to clip pennies, they could have and made, money where they can. But I can assure people that, all of our major shareholders, from Merck, Franklin Templeton, Broma, Vescor, Century, they're all very, very, very supportive.
Do you have any plans for a share rollback in the near future?
Not at the moment. The issue is we are, I believe, at 180 out right now. 180 out, 215 fully diluted. But the reality is that this is a pretty tightly held stock. Most of this 63% doesn't really trade. talking about if you need to raise money in the coming years, later next year or early 24, you could do it through a royalty. So non-dilutive on the equity level, but dilutive on the asset level is something that we would look at as well.
Okay, and I missed a follow-up question from when we were talking about the breccia pipe and RC drilling. So can you clarify the breccia pipe target will be drilled with RC as well and not core?
Yeah, we would drill that with RC for sure.
Okay. I have one last audience question, and it actually might be my favorite. Are you having problems hearing me, Jay?
Yeah, a little bit. It's all good.
Okay, hang on. Let me just make sure my mic's on. Usually I'm obnoxiously loud, so that's a nice change for you. So I'm going to read this one out because it amuses me. So it's a European investor. First off, he wanted to congratulate Jason Banducci with his latest purchase at 19 cents. Obviously, investors like to see that kind of management buying. So he had three questions, the second of which we already answered in the sessions. The first one is, could you please elaborate on the near future of the Nevada and Arizona assets and how they will be profitable in relation to the fact that both have not been in public markets for a long time?
You know, the beauty about these projects is that a lot of all of them have not been in a public domain for over a decade. So when Wildcat and Mountain View were being drilled by LAC Minerals in the 80s, and then Vista Gold, gold price was a couple $100. Okay, so 0.4 didn't cut it. Then Vista turned into Allied Gold. They sat in Allied Gold for quite some time. Allied was going bankrupt because of the Highcroft mine, which is that AMC story now, which is a little bit further away from us. So Allied was trying to put an asset into production that was going bankrupt. So you weren't going to go spend $3 million on permits and another $7 million in exploration for an exploration target when you have a mine that's going bankrupt. Then when Allied went bankrupt in 2015, gold was at a 1050, 1100. Waterton bought the projects. Waterton didn't even know how to get to site. Okay, they'd never been there. So herein lies the opportunity for investors today, is that really these things have not been touched since the gold price was $200. And so even at 16 and change, 17 and change, there's a lot of value that needs to be unlocked in these projects. And we're just very systematic and scientific about it and go on our merry way, irrelevant of what's really happening us on a macro framework.
Okay. And the last question was, do you drink IPAs? And if so, do you agree that Lagunitas is the best brand around?
I would love to know who that question is from. And no, I do not drink IPAs. I'm not a hipster. I drink tequila and red wine, if anyone wants to know.
I think you've created a seller now, Jason. You've disappointed someone out there.
Yeah.
Okay, so I don't see any more audience questions, but there's a couple of things that I just want to get clear on. So you're done drilling for the year. Can you just lay out what's happening in the background so that investors know what the catalysts for 2023 are?
Totally. In the background, what's happening right now is we've just finished up the columns at Mountain View. So we had to do the mass balance. So we will release the bottle rolls from Mountain View. Then when we do the mass balance on the columns, we will release the Mountain View network. Just so everyone knows, there's no met work done on Mountain View, and we are very thrilled on the results, okay? That's what's happening at Mountain View. The last column just started at Wildcat. The first one looks exceptional, so we're very excited about that. So at Wildcat, we will release the bottle rolls, then we will release the columns. We've just finished all of the baseline work, and we will submit the exploration plan of operations, like I said, at the end of the month. Then the final met work for Wildcat will come out. Then the updated resource then the PEA, and then by that point, we should have the exploration plan of operations in hand, so we can start stepping out and growing the story. But in the background, things that we're doing is doing all the detailed engineering for the mine plan of operations. So the humidity cell test work, the geochemistry, the gap analysis, the condemnation holes for the leach pads, site infrastructure designs, CapEx optimizations from haul trucks, electric trucks to conveyors, natural gas optimization or solar. So all of that stuff's going on in the background. But what people will really see is met results, updated resource, PEA, and then most likely some really nice step out in exploration drilling.
Well, it sounds like you have a lot of catalysts coming for 2023. I don't see any other audience questions, and I've run out of my own. So I guess maybe a good way to end it is just give us like the 3 to 5 selling points for Millennial. What makes Millennial special? Why should investors own it right now?
Yeah, I think, like I said, the major overhangs have been completely removed off the story. That being Waterton, there's significant cash in the bank to get us right through most of next year. You have the highest quality ounces, strip adjusted grade ounces. This is how everyone should look at them. Reminder that Railroad got bought for $230 million. There's a severe scarcity of these ounces. And I'm only talking about 2 projects that have only been drilled on 5 acres of 24,000 acres. Okay. So we're going to significantly grow this, but just at the current resource base is enough reason why to own it. And like I said, there's a tight flow, cash in the bank, and a catalyst-rich story in 23 that can really drive value.
Perfect. Well, I think that's a great summary. Thanks so much for your time, Jason. Thanks to all the audience participants. If anyone has any follow-up questions or wants a one-on-one meeting, feel free to reach out. And yeah, thanks, everyone. Have a great day.
Thank you very much, everyone. Take care.